Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors. And today's contract tip has to do with lender mandated repairs when a buyer is getting a conventional loan. Yes, that's what I said. Lender mandated repairs when a buyer is getting a conventional loan. So, does not happen that often. However, we are seeing it happen increasingly more. I have touched on this in previous videos, but because we're seeing it more, I want to touch on it again on some options that you have as an agent to address this issue. Number one is address the issue prior to it becoming an issue that could kill the deal. So, let's back up a little bit. We know that if a buyer is getting an FHA insured loan or a VA insured loan, whenever a buyer and a seller go under contract with that loan contingency exhibit, the repairs are the lender mandated repairs. This is a completely separate issue than any items to address concern that a buyer is asking a seller to address. These are lender mandated repairs, and on an FHA or VA loan, they are addressed in the contingency exhibit. So, in the GAR loan contingency exhibits under FHA, and the same for VA, it is under paragraph. Let me find it. It is under paragraph 15, and it says repairs required in an FHA commitment. Any repairs required in the FHA commitment shall be completed and paid for by, you negotiate buyer and seller, prior to closing, provided such repairs do not exceed X amount of dollars in total costs. And then it goes on regarding what happens if they do exceed those costs that the buyer and seller negotiate up front. In the RE forms, in their FHA loan contingency exhibit, the same thing, and this is also true for VA in both GAR and the RE forms, it does have a place where the buyer and the seller negotiate that if the FHA commitment identifies any repairs which are required to be completed prior to closing, the seller agrees to pay the amount not in an excess of X amount of dollars. So, as agents, we're pretty well familiar with lender mandated repairs in those government insured loans. The issue that we are coming up against are lender mandated repairs for a conventional loan. And you're thinking, well, why on earth would a lender mandate repairs in a conventional loan? We've got investors that buy properties that need a ton of work. That's the purpose. They get it and then they rehab it themselves. Or we get people buying it, tearing it down, and building something new just because they want the land and the lot. So, or we get a buyer that wants it and they're getting a deal on it or whatever. We're just not used to seeing lender mandated repairs for a buyer getting a conventional loan. We have been seeing them increasingly, especially when a buyer is getting a loan from one of the bigger banks, for example, Wells Fargo. But we are starting to see it, as I mentioned, increasingly more in other types of lenders, not these big bank lenders, but in a direct money lender, in a broker. We're seeing it more and more. So here's what to do or how to address the issue. As I mentioned, number one, address the issue up front rather than trying to backtrack when you are close to closing and you all of a sudden find out the lender is going to mandate repairs, and it might delay or actually even terminate the contract if the buyer and the seller. So in the GAR package, there is nothing about repairs in the GAR conventional loan contingency exhibit, nor in the RE forms purchase and sale contract and standard terms where it talks about conventional loan. So the first thing is go ahead and address it if you know your buyer is getting a conventional loan as a special stipulation. And GAR has a special stipulation new for 2020. It is special stipulation 524, lender required repairs. Any repairs required by lender are to be completed and paid for by, and you negotiate buyer or seller, prior to closing, provided such repairs do not exceed X amount of dollars in total costs. Sounds just like the verbiage from FHA and VA. I wonder why that is. In the event the anticipated costs exceed the amount listed above, an itemized estimate shall be provided to all parties from third-party contractors selected by the seller of the total cost of repairs to be made by the property. Seller or buyer shall have the option to pay the excess amount. If the parties do not agree in writing who shall pay the excess amount, then this agreement shall terminate within 3 days of written notice of the itemized estimate. So that is one way to address it in a contract prior to it ever coming up. But what do you do if you did not include that special stipulation when the buyer and the seller went under contract and they're binding? You are getting close to closing, and all of a sudden you find out the appraisal gets done, and all of a sudden you find out, gosh, the conventional lender is going to mandate repairs before we can close. Well, there are a myriad of questions. There's a lot of information you need to find out how to negotiate through this issue. Number one, it depends on how close you are to the closing date. First thing you need to know is you need to find out how much money are we talking about. Are we talking about a few $100s, or are we talking about several $1,000s? So that's number one. You need to find out how much money you're talking about. Number two, you need to talk with the lender, and you need to find out, are these repairs that must be completed prior to closing, and then a reappraisal is going to have to be done, checked off, agreed to, go back through underwriting, and then be able to close. If that's the case, you need to check out your time frames between when you get this information about these required repairs and your closing date. Or can you find out from the lender, can these funds be escrowed and the buyer complete them after closing? So those are two things you need to find out. That how much? Three things, I guess. Do they have to be paid? Do they have to be done prior to closing? Or can that money be financed or escrowed in, basically, or financed and done after closing and go ahead and close? If they need to be done, regardless of when, then there's some negotiations that need to happen financially between the buyer and the seller. Number one, is the buyer willing to do all of these repairs? It is part of the loan, so it is on one hand, you can look at it and say it's a buyer issue, it's a buyer responsibility. Is the buyer willing to do that? On the other hand, the seller's not going to sell the house to this buyer on a conventional loan, mind you, if these repairs are not done. So is the seller willing to participate? So once we find out how much money, there's several ways to deal with this issue. So number one, have the seller do the repairs, and then perhaps do an amendment where if the seller is making a contribution to the buyer's closing costs, that seller contribution to closing costs is lowered by the amount of money required to actually do the repairs. So that's one way to handle it. Another way to handle it would be, and again, this has to go hand in hand with the lender, at closing, from seller's proceeds, seller to pay vendor of buyer's choice X amount of dollars to handle those repairs. If you get permission from the lender to do it that way, that would be another option to do it. And then again, you can negotiate if the seller is willing to do that. That's awesome. Or negotiate, perhaps renegotiate a lower amount for closing cost contribution or something like that. Another way would be to delay, again, depending on how much time, when you get this information from the lender when the closing is, you might need to extend the appraisal contingency to be able to have time to get these vendor estimates to find out how much money we're talking about. So you would want to look at that and explain to the seller why the buyer is requesting a delay or an extension, I should say, of the appraisal contingency. It's always a little bit tricky for either buyer or seller to pay for repairs on a property when, well, it's a little tricky for a buyer to pay on repairs for a property when they don't yet own it. If the seller pays for repairs on a property, on one hand, it might improve that property, but on another hand, with a different lender or a different appraiser, those repairs may not come across. So again, this is a very delicate issue, worthy of your expert negotiating skills between both the buyer and the seller. And then a last option for you to consider is if the buyer is willing to do these repairs, but you are cutting it really close to the closing date and you can't extend the contract for whatever reason, another option would be to consider doing a lease purchase. Amend the contract, the purchase and sale agreement, and amend it to make it a lease purchase agreement. And what that means is it is a short-term lease in the interim between to allow for a delayed closing. So if you would pull out the lease for purchase, you'd have to amend it into a purchase and sale. Into a lease purchase. Use the lease for lease purchase. Negotiate through all those items. The buyers can move in. They're not closing yet, so the buyers can move in. The buyers can then manage those lender-mandated repairs and then go to closing. So it could be a very short-term lease purchase for a month, let's say 2 months, something like that. So that might be another option to negotiate between a buyer and a seller. Bottom line for you guys as agents, you need to stay in very good communication with the lender, with the listing agent, with the selling agent, and with the buyer and the seller to work through all of this cooperatively together to get this transaction to actually close for the buyer and the seller. Thank you guys so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.